And move this out the way. Okay. Um, okay. So reclaim host. Okay, you guys can see my chart, yeah? I hope
Yeah, we can see it.
you can also hear me too. Okay. So let's see. I'll try to go so we can make it quick. I'll try to do a quick this whole movement right here started from this trade. As the days go by, I do delete my writing markings. So I try to keep a clean chart. Like after this call, I was already about to delete everything, but then I remember I had this call with you guys. So I left some of my trade on there. But
Sorry to interrupt you. I'm not going to be here for long. I just finished work not long ago, but I know it's recorded. Can you include liquidity sweep? Because that's the part I get so confused on.
okay, yeah, I'll make sure to mention that in
Thank you.
the
So,
explanation. Okay, so let's start in this area, right? I'll start from the bottom, which will be the first trade, which was started from this area. So let's go over that one. And then I'll carry on through the rest of the week. I won't do like a full analysis, like top down and all that. I'll just explain how I found the setup and then carry on with the next ones. So this one right here was basically a medium inducement that made me take this trade. I already deleted the position, but it was a 1-2, I believe, a 1-7 or 10 that I took. So this was the medium inducement that happened here. We had the high that led to the low that swept that. We were all familiar with medium inducements, and price did it right at this 4-hour imbalance. So from the 4-hour, we know that we had this imbalance. It was much bigger than that, but I like to refine my imbalances as price continues to go deeper into it. I just resize it. So it was from here to here, obviously. But then as price kept going lower, lower, I resize it to make it smaller. But let me go closer to the price action. First, once I identified the medium inducement, the first, because this was also during news time, guys. So I don't know if you guys remember. So you had this swing low led to this swing high because this is the highest point amongst all of these. And this swing high led to this swing low, the lowest point amongst all of these. A lot of people thought that price should go bearish because of the fact that this low right here, price did cause a BOS here. So most people was expecting price to come up here and push down lower again. I've noticed that doesn't happen quite often because you can see right here, there's a trade that I had took from here. It was a sell that I entered from in this position at one point, which was on that Tuesday. Price ended up coming back and waking me out of my position. So I had hit break even. The reason so is because the same thing happened. On the 5-minute, price closed the body here. On a 15-minute, it didn't. So when that happened and price came back here and tapped me in, this was my entry on a lower time frame, and price tapped me in, I was under the impression that would price would respect that zone. And I was quickly found out that this low, because it didn't close under the 15-minute, price will still come back to induce one more time before coming back down, which is what happened here. So price came in, mitigated this zone and came back up. So I'll go to the 5 minutes so you can see it where price did that. This was the entry. I had this highlight to this low, breaking this structure. Price came back up here. I entered the trade around 11 and some change. So this was the high. Break and retest. It was somewhat with the break and retest traders because you had this break, price came here to retest. So I anticipated price would take them out, but because we were so close to the 4-hour POI down here, I figured price would just save them for later, along with the rest of the trend line that was up here, all this big old trend line we had at first. But granted, price reacted from it was like a 1-minute OB or 3-minute OB down here. Price reacted from during Asia. It came back and took me out while I was asleep. But granted, I had moved it to break even after taking 1 to 3. So price came and took me out. So I learned very quickly, as you can see, this is the 5-minute. This high led to this low, the body closed. So a lot of you may see, oh, if the body closes on the 5-minute, but on a 15-minute, it's simply induced, that should be fine. Price is going to come back and break that. That's not necessarily true. And you'll see that in a lot of time during these sessions. So the same thing happened here. Cancel this. The same thing happened here basically is where price decided to come to that 5-minute, did not close a body, head over to the 15-minute. I'm sorry, on the 5-minute, close a body, head over to the 15-minute and did not. So just so I can also get Aisha's answer out the way right here in regards to the liquidity sweep. So this right here was an inducement. This right here, this was an inducement. Price built up liquidity, all this range. You can see this is a consolidation, right? And like I've told you guys before, anytime you see a series of buildup of highs like this, so close to each other, bear witness is going to be liquidity. As you can see, that's trend line right above it. There always tend to be liquidity. That price is just building up. It's like a channel. Price is just building them up just to come back and take them all together at once. You can see it's like a whole channel that price is basically trading within. Let's see, bounce, tap, 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 and then it broke down low first. It's going to come above. So it's similar to the consolidation zone. You're going to know that there's going to be channels where price is going to do its thing, just like in consolidation zone. If it breaks out of the high, it'll come for the low. Same thing with channels. If it breaks out of the low, it's going to come from the high, or vice versa. But in this situation here, this is a liquidity sweep. Now, if you're wondering, well, I'm sorry, this is an inducement. Well, the difference between an inducement and a liquidity sweep is the liquidity has to be generated for price to sweep it. So all of these levels, this trend line, this channel, these highs that was left unswept, that's where after price does its inducement and mitigate, this whole run right here during the complex pullback is a liquidity sweep. Price is just going back, sweeping all of the liquidity that it left behind until it reaches the decisional or the extreme of that higher time frame to then continue main push again, the reveal of market intent. So, and I'm speaking on for the external, not the internal reveal of market intent, because you'll have some internal reveal of market intent, i.e. this bullish push was a reveal of market intent. This right here was another one. This right here was another one. So you'll have internal reveal of market intents, but we're speaking about the pro trend one. All right. So I won't be able to go through all of the trades, but this one right here, I'm just going to narrow down to the inside of where I took the trade. So I went down to the 1 minute. And I'll just show you the read, and then we'll go to this week's sessions. So you can see where it all began from. So that medium inducement is what gave me the perspective to look for buys up until we reach our zone. So what happened here? So price came in, did the medium inducement right here, pushed away. We had an order block here. Now this order block was somewhere within Asia. Let me turn on my session. Okay, this was this was a London high. I'm sorry. So this was a London high that price came and retest. Now, what significance does this? This is a lower high. This lower high versus a medium inducement. This lower high that only broke a 5-minute structure but couldn't break a 15-minute structure. This lower high that has already been not retested but had a complete retracement here, but came to this zone, mitigated deeper into the imbalance, but did not cause nothing significant, versus a medium inducement that represents a reversal of the market. A medium inducement that's happening inside of an imbalance. A medium inducement that's happening right before news. So all of these things you got to put into context. Who has more power, a medium inducement or a 5-minute supply or a 1-minute supply, while Asia high is still not yet taken? This supply actually came from a mitigate. All this zone right here was coming from a Asia, I think was a 3-minute inside of Asia zone that price hadn't break yet. There was an order block there that price was respecting. So already you can tell that this was a retail supported resistance zone right here. This whole range right here was retail support and resistance. Look at that. All these taps that happened just in this range. You had price come here, 1 tap, 2 tap, here again, tap, tap, tap. This zone finally got tested. And you can see this was also a trend line. This right here, trend line to the downside. So you can see all the liquidity being built up on top of, mind you, these right here, we were just talking about these highs all next to each other. So you can see the generation of liquidity price already building. And now it finally gave us a medium inducement. We went through weeks of no medium inducement. So in that case, soon as I saw price do this reaction up here, this was during news. News came right here at 8 at was yeah 10 a.m. News came and the news candle, and you know the news is supposed to, the type of news that it was, is supposed to either take the highs and the lows. This all the news was able to do. Come straight to this or this demand and react up. At that moment, it's like, okay, if the news is not even able to break this low, this high is not even to break this low, something's not is not making sense. And then price gave you a two-leg protocol from here. One, two. Once that happens, all I did was what? Wait for price to come down, and I entered from the inducement of this low. Price induced this low, mitigated it back into this demand, and I took the buy up, took the rest of the run with price action. So that was just the beginning of that move that led me to all the other trades that came because I was expecting straight buys. I had a few counters where price showed me some opportunities to sell, but majority of them were buys. All right. So I had another buy here, and then this one here was the sell. Why did I sell here? Same reason. Price came here and had a medium inducement to the high side. As you can see here, this was a high that led to this low, and price broke above. We also had a consolidation range right here, and we also had a consolidation here. So hence another reason why I took my trade all the way up to past this impulse candle. So from here, after the medium inducement, this one happened at around 10 in the morning, I believe. On this, I think this was on a Friday. I'll try to be quick so that way I can get to any questions. This was the medium inducement. Then price did one more sweep and then tapped into another imbalance and gave us a what? One leg. Actually on a 1 minute is where I got the clear two-leg protocol. I prefer to enter trades from the 1 minute versus a lot of these other time frames. And feel free to interrupt and ask if question if you guys have. Okay, there we go. So price came, did the medium inducement here, 15 minutes, it was a wick. We already took the previous day on this session. Price came and did one more minor inducement to tap into the imbalance. So this medium inducement, you know, there are people who knows that a medium inducement, as soon as it happens, they don't need an order, but they just enter the trade and they try to put their stop loss afterwards. So for those people, price went away and came back and took out those early buyers, those early sellers. That minor inducement then gave us that one leg, two leg, and what did I do? I entered from right here.
Do
From
you wait for the two legs protocol to show before you enter a trade? Like sometimes I do the same mistake what you just said. Like as soon as I see medium inducement, and
yeah.
if there's a supply or a demand zone, I'll enter it.
Yeah, I do. I don't take it. I don't like aggressive entries. Not that I don't like it. There's
Mm,
a place for it. Some aggressive entries is obvious that okay, this should be entered aggressively. Any
yeah.
zone that I'm not certain because there's like a tug of war between who's in control, I don't
Mm,
enter aggressively. I just wait for a two-leg protocol. Because nine out
okay.
of 10 time price will give you either a two-leg protocol, a build-up inducement,
Mm-hmm.
mitigation expansion, or a change of character breakup structure. So in this
I
case
see.
right here, after it took out the early sellers, it gave you that one leg, two leg, and then I entered from the retest right here. Boom, boom, boom. Price did a little bit of consolidation, but my highs was, I mean, I covered above this wick here, this bar. So price came right here, did one last inducement of these trend lines. They had a little trend, one tap, two tap, three tap. Once it induced it, it flushed. It went down and I took it to this zone because I know we were bullish. So I wasn't anticipating nothing more because we had a consolidation zone right here. So I knew that price would come take these consolidated traders out. So I targeted them as, and then I also had this trend line. Some of these are fainted out because after this happened, I faint them away, but you'll see we had these one tap, two tap, kind of carried on trend line traders right here. So when price came and tapped me here, I knew that we were going to target these trend line traders. And then we had this supply right here. Now, I didn't target lower. Granted, price did. This was my decisional. Price kind of just reacted and came down to the extreme instead. But this happened during almost Asia and then tapped and then flew up. So price then continue up. retested the extreme once again at a deeper range, which was during London, I believe. And then I ended up catching a buy. Where was it? No, actually, I didn't catch no session, no trades on these when I caught it right here. Quickly go to 5 minute. Okay, so it was this one right here. Price came up to, what zone was this? I think this was this was a fib premium from the 4 hour. You could see this quickly. I think it was the 4 hour or the one. Actually, it was the 1 hour. I believe it was. Yeah, from the 1 hour, this was a high right here. This was a high that led to a low that broke structure. When you do your fib, you'll see that price has not retraced to the 6.18 range right here. When the price did the consolidation here, it was under 0.382. So it never did a complete pullback. So price, as you always expressed to us, price when it comes back to these ranges, especially when a 7.86 and a 6.18 is not fulfilled, it will come back and fulfill that zone before it continue up. It'll give a reaction. So I anticipated a reaction from there. So price came into that zone. It tapped. I did not enter aggressive. I waited for the confirmation. Let me find that zone. There we go. Oh, this computer moves so slow. There we go. I waited for confirmation and I believe it was another two leg. I've been catching a lot of two legs lately. I don't know. I feel like price just been showing a lot of it. Usually the two leg protocol is the quickest way price could get out of the range without alarming many people to jump in it. So that's why you have to be precise and know what the two legs look like, because there are some two leg traps. So you got to know how the two leg traps look so you don't fall for that as well. Okay, so right here was the two leg. Let's see, pull this down right here. So price came into the zone, tapped into the supply. This happened at around 8:57. I waited, price did one leg, came down two leg, gave me a equal low, came back up, consolidated a little bit, created equal highs. This could be a two leg trap right here. See this slight little push, pullback, one like this, and it didn't break. This could be a trap. So a lot of time you want to be careful. That's why I say you want to be clear of the two leg. When price came down and broke these lows, that's when it confirmed my two leg. And then I entered from this range, from this low, from this high that led to this low, or this low that led to this high. Either one of them would have been fine. Price just always going to come back and retest it. These equal highs will just be, how do I say it, a diversion to kind of keep you away from the trade. Let me zoom in a little bit more. In these situations, when price has already confirmed the two leg, if you see an equal high like this, it's not to actually come sweep. So a lot of people freeze up. They'll be like, okay, wait, I'm gonna wait till these equal highs get swept. Price is just making you think that it has to come get the equal highs before it leaves. But the reality is it already confirmed that it's leaving with the two legs. So because you're waiting on equal highs to get swept, you didn't become a part of the move. So you have to ignore this equal high in these cases, not all cases. In this case, you ignore the equal high because it already confirmed the two leg. It's like price doing a change of character breakup structure on a high time frame, 5 minute or so, and then it leaves the equal high above the change of character zone. You're not gonna say, okay, well, now I'm gonna wait for price to break the BOS and the chalk zone to go get this equal high to then decide to go to sell off or buy up. It doesn't make sense. It already confirmed by giving you the setup. In this case, a setup model is a two-leg protocol or a change of character breakup structure or a ULE. So all of those three are easy entry models. So I took this one only to 50% because I knew that we were still bullish and this was just going to give me a reaction from this low that led to this high and it caused a BOS. Let me go to the 15 so you can see it clear. Yeah, so it was from this trading range, which was this low here, led to this high, broke this structure. This was the decisional, the last push that break the structure. So I didn't want to try to take it all the way back here because I wasn't sure if price was even going to come down here because look at the size of the bullish pressure we had. So I didn't expect that price would. So I only took it for a 1 to 3 and I got out at 50% of the range. So if you see my indicator, I only took it till about 50% and I exited the trade. See, exited right underneath 50%. So I wasn't trying to take it long because it's a counter because the whole market is bullish. So it finally, when price came here, this was during London. The next day, price tapped into my extreme because it reacted off this decisional, came down to the extreme. I didn't trade London. I don't trade London anymore. So when price did that reaction, where are we? Price did that reaction. I waited for, this is today, I'm sorry. Got myself caught up in the wrong one. There we go. I waited for price to come do one more inducement, because if it's gonna come in your session, you want to trade with inducements. You don't want to just trade because price mitigated something. You have to wait for inducements. So what happened? New York opens up. Price came in here at 850-ish. I'll go to the 1 minute because I really like this price action on this trade, because price finessed so many people. So many people were into sales. And I was like, man, I don't know what you guys were seeing. Well, not you guys, but what they were seeing is in a different group chat that I'm in. They were all anticipating sales. Okay, so I'll quickly break this one down. London came, tapped the zone, right? So let's say London opened up here, minor inducement, flush. Some might have gotten into this trade, some might have not. London didn't really give them a clear entry. It just flushed. Boom, made it to the extreme zone. Then London gave a clear entry here. It gave a two-leg protocol. London say one leg, two leg, came back down, retest, pushed up. Got to this supply, that was as much as it would give them. It gave a change of character here, break of structure. So London confirmed a bullish move, but London came back down to the zone, consolidated, the session volatility died coming to the New York crossover. Then New York took over. You know, the New York morning opening session is a liquidity session. So it opened up like this, coming back into the zone. First thing I noticed is price did this high led to this low, did this minor inducement. This is right before 9 o'clock. I'm like, okay, I'm curious because this could be an entry for me. Because if price come up here, break this structure, come back down, retest, push up one more time, and breaks above this, I'm taking the next test to go up. So instead, price pushed up here, mitigated this supply. I'm like, okay, well, this supply should not hold because we already mitigated this demand. So I said, this has to be a smart money trap. If this supply gives a reaction, it can't just be a reaction to come retest. It has to take liquidity because a smart money trap is only a smart money trap if it takes liquidity. Let me turn also this off so that way it's not so much colors in the back. If the smart money trap doesn't take liquidity, it's not that it's not a smart money trap. The smart money trap has to invite and entice people to buy into the idea that this zone is going to hold. So it has to go sweep liquidity. So in this case, this smart money trap led for this sweep to happen. And of these lows, this was a 1-tap, 2-tap trend line, 3-tap all the way across. Soon as it swept this low, let me move the screen up. Soon as price swept this low, mind you, this is London low, that happened right here. I think, yeah, this was London low. No, this one was London low. Soon as price swept that low, this was at about 916. I said, okay, well, I'm not just gonna buy up just because the London low swept. I need to see some sort of a entry model. I need to see my lower time frame entry model. And you can see very clear what happened. This was the high that led to this low, broke under this structure. Before even all of that, what you could say is this whole range, tap, 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 finally induced. So this is what? Unintentional movement. This whole rainbow was unintentional movement, ULE, liquidity sweep, price pushed out, final inducement, pushed away, broke the high that led to the low that caused the inducement. So and price pushed away, induce, push out, retrace, mitigate, and expand. So in this setup, you could have seen it two different ways. You could have seen one leg, two leg, entry. Oh, I must have signed in onto a different account. My bad, guys. So it's telling me I got 10 minutes. If it cuts, what I'll do is I'll run the link right back so that way we can finish up and get into Q&As, all right? Because I must have signed into a different account. Okay, so two ways you could have seen this trade, like I mentioned. You could have seen one leg, two leg entry right here underneath covering the lows, which is the one I took, and I targeted the highs of the session right here, these trendline traders. So that was going to be the first TP on the 3. And the overall trade, if you would have taken it from the extreme itself, would be to here, which oh yes, actually, yeah, I did. I ended up pushing it because this was my first TP right here. This was my first TP of 1 to 3, partial TP1, as you see I marked right here. And then the rest of the trade was all the way up here to the London high, which let me open this up so you can see. Yeah, to the London high, because as we've always known, anytime you see London and New York highs or lows next to each other, that's an area of liquidity. Expect that price is going to come sweep that zone as well. So in this case, I targeted all the way here for the 1 to 11. This was my first TP target, this 1 to 3 area right here. So that's why I have this right here. Okay, and fast forward, I didn't trade after this. I know this session is about to end soon. I don't want to take too much on the explanations. Today's trade, I missed the early entry. When I messaged you guys, I missed the first entry. My first entry was from here. I'm gonna do this quickly because this was a very easy setup. I got into the session a little late, that's why I missed it. But I had seen it coming because right here, what you have was a 3-minute supply right here inside of this little range. This mitigated the decisional. Mind you, we are at the 4-hour decisional. This is where we're at, all right? So you got to understand the context. We've reached the 4-hour decisional. It was bigger, but remember, as price goes deeper into my zone, I just resize it. So price came into this decisional, extremes above. Price gave us a reaction from this decisional. We had one leg of the 15-minute, 2 legs of the 15-minute. We did not mitigate this extreme. This extreme was not tapped. Price comes back up to this, I think it was a 3 or a 1-minute OB, right at the edge of the high that mitigated, right here. Goodness gracious, this little computer is gonna drive me nuts. Okay, I think it was a 5-minute then. Must have been a 5. Yeah, it was a 5-minute OB. Sorry, guys. So yes, price comes to this 5-minute OB. This was the early sellers. Price came in, took out the early sellers during New York, London, and then mitigated this zone at the top of the hour at 7:50, going on 8 o'clock. Now, that's not my trading time, but I just have to pay attention to what happens from there because my session is going to come right at there. So at 7, what is it? At 8 o'clock, price gives you 1 leg, 2 leg. Right here was my entry at 8:35, 8:36. Now, it's not exactly at 9, but I give myself a buffer most times, whether it's 15 minutes, 20 minutes before the session open. If it's at a zone where price needs to react from, I'll enter it within 15 to 20 minutes earlier than the time. I do the same thing with the closing time. My kill zone, I'll stay an extra 15 to 20 minutes if price haven't given me the move and it's approaching the zone that it needs to react from. But had this been, let's say, like around 7:30, start of 8 o'clock, then I wouldn't take it. But when we pass 8:30, that whole first 30 minutes to an hour of the New York opening is already gone. Like the liquidity is already created. That was all this right here. All this bullish push, that was all the liquidity being created for price to come sweep. All of this that started since 7 o'clock. So I anticipated that price would do that, but I missed the move. So when I came into the session, I believe it was like already right here. Price was doing this retest of this zone, and then price started creating this, and then we had our Zoom call, and in the same position. At first I had my stop loss above here because usually when I take a retest entry, I cover the entire high. Just happened. Like I'm hearing myself. Okay, so there you go. So yeah, so I covered this highs here and I took it to just the mid-level here at, what was it? I think it was at 1 to 4, because in this level here, there was a low that led to this high that broke this structure and also took these highs. This area broke above these internal highs. So I knew that price could somewhat give a reaction from there, which it did. It came through, mitigated it, gave a reaction. But these equal highs, I took a stop loss in this range. Where was it? From right here. I took a buy up here to counter from this zone to try to take a counter up to at least sweep where I came from. But price came back down and used this as an early buyer. They came back down, took us out right here. And then it gave me this move up here. And I tried to take a sell down just to take the bottom of the previous day session to kind of give us a medium inducement to flip the market back up, because right now the sellers are in control. since we've mitigated that decisional. The sellers have been in control. We're in a seller's market. So until we get a medium inducement to reverse the market, we're still in a bearish trend. Now we do need to come take the previous day high, but that won't happen with just price pushing up by itself. It has to give us like some sort of a medium inducement before that happens. So that's why I was targeting here to potentially get that medium inducement and allow Asia to kind of consolidate and begin the reversal. But as you see, price came here and decided to kind of, do its own thing to the downside. So I just got out early once price come down here and started retracing, creating these highs and these structurals. And I saw these equal lows, trend line being built. I anticipated price will try to do one more push down to sweep and then come up. But then once it broke above this, I said, all right, I moved to break even and I just closed the trade. So right now, as you can see, price probably just gonna come up, sweep these highs and then continue down probably through Asia. So that was pretty much most of those sessions. Took some losses, took some wins. I had a similar trade on US 30. I know you guys don't trade US 30, but US 30 gave me a similar trade yesterday for a sell. It's been bearish. The whole market was bearish. And what I found was that this was the last high within our key time window, 11. This high led to this low, broke this internal structure, left me equal highs. I waited for price to retrace, entered from the this high right here, sold off, covered the high of the trend line. When price came through, mitigate, sold off to the decisional, and I got a 1 and 3 from there. And then I did a similar thing this morning. I caught the 1 to 3 for the buy, but I haven't hit full TP yet. This was based on a two-leg protocol. Price came, did its medium inducement, and gave me 1 leg, 2 leg, and I entered off the 3rd leg right here. It tapped me in, pushed up. By the time I hit the chalk, I was up 1 to 3, and I was taking the rest up here for a 1 to 5, but price got about here. It didn't finish getting to the London high yet. So inshallah, maybe price comes, pick some liquidity. This is a discount range. This is also a discount range. This one right here will be the first leg, 'cause that was the one that broke this high. If it doesn't react from here to hit TP, then I'm assuming from here, I might get a reaction during Asia to kind of consolidate and then push up. Inshallah, that's what it will be. If not, then hey, already at 1 to 3 and I broke even. So if price comes back under these areas, it'll take me out. So these are some of the thought process, but let me it's like a minute and 30 left on this this call. Let's see the time left. What I want to do is run another one. This time I'll just answer the questions, and if you guys want to show your screens for certain things, or if you want me to pull certain things up on my screen to answer, we'll do that. Yeah, how that sound?
Yeah, that's fine.
Cool. Okay.
Thanks.
I'm sure the same link should work, but I'm just gonna end the call right here, the recording, and then I'll still drop the next link.